Hey everyone, welcome back to Corporate Decoder. Today, Warburg Pincus Access Fund LP just filed its Q1 10Q report for March 2026 and I'm seeing some early signs of how this new fund is shaping up. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a look at a new private equity fund that is just starting out here is what stands out from their very first financial report. Alright, so this is Warburg Pincus Access Fund LP's quarterly report for the period ending the 31st of March 2026. This is a 10Q filing, which is basically their update on how the company is doing financially for the first 3 months of 2026. What is really interesting here is that this fund only started operations on February 2026. So this is essentially a snapshot from the get-go. They are launching with a bunch of different classes of units class, R-Class A-Toin, Class BE, and Class E are all listed as having units issued and outstanding. They also mention unlimited units authorized, which is pretty standard for investment funds. Now let's dive into the numbers, starting with the fund's assets and liabilities as of the 31st of March 2026. Their main asset is an investment in what is called the Warburg Pincus Access Master Aggregator LP. They valued this at over $369 million. Keep in mind this master aggregator is where most of the actual investments are held. They also have about $4 million in cash and cash equivalents. On the liability side, they owe over $7 million to an affiliate, which is common for funds setting up. They also have almost $12 million in servicing fees payable and over $400,000 in management fees payable. Overall, the fund has net assets of over $351 million. This gives us a look at the value of each unit type. For example, a Class R unit is worth about $dollars and CHR cents. A Class E unit is a bit higher at around $dollars and CHR cents. Moving on to the income and expenses for the first 3 months of 2026, income was pretty low at just over $6,000, mainly from dividends, but expenses were quite high at over $6 million. This includes significant amounts for performance participation allocation, which is basically a cut for the fund managers of about $3.8 million and amortization of deferred offering costs around $477,000. As a result, the fund had a net investment loss of almost $6 million in its first few months. However, they also show a gain of over $25 million from the change in value of their investment in the master aggregator. This means that even though they had losses from day-to-day operations overall, the investment grew in value significantly in this early period. This resulted in a net increase in net assets of about $19.5 million. Let's look at where the money is actually invested. The vast majority of the fund's investment is in the Warburg Pincus Access Master Aggregator LP, which is valued at over $369 million. They also have about $4 million in cash equivalents from money market funds like Morgan Stanley and JP Morgan. This section breaks down the investments made by the master aggregator. Most of the fund's money is in affiliated secondary investments. These are basically investments in other funds managed by Warburg Pincus. They have significant investments in funds like Warburg Pincus Global Growth 14 Partners LP and Warburg Pincus Global Growth Partners LP. The total fair value of these investments in investment funds is around $449 million. They also have direct investments totaling about $44 million. These are likely private companies that the fund directly invests in. One of these direct investments is in Deferred LLC, which is an industrials company in the United States. The filing states that the master aggregator's investment in Deferred LLC represented about 5.2% of its net asset value as of the 31st of March 2026. This part of the notes explains how the fund is set up. It is a Delaware limited partnership formed in July 2025 and started actual investment operations on the 2nd of February 2026. It aims to provide access to Warburg Pincus's private equity strategies for eligible investors. The fund is managed by Warburg Pincus LLC. They'll handle the day-to-day investment management. All the big names like WP Ace, WP Master Aggregator, and others are all part of the same Warburg Pincus family. This section details the different classes of units. There are Class R through E units. Each class has different fee structures. For example, Class E units, which are typically for insiders like employees and affiliates, do not have management fees or performance participation allocations. Now let's look at the Warburg Pincus Access Master Aggregator LP itself. This is where the actual investments are held. As of the 31st of March 2026, its investments were valued at over $449 million. These are broken down into investments in investment funds and direct investments. The fund also has a substantial amount of cash and cash equivalents at over $63 million. Its total assets are over $557 million. For the master aggregator, its income was just over $592,000 from dividends. Expenses were around $795,000, which included professional fees, due diligence costs, and organizational costs. This resulted in a net investment loss of about $202,000. However, the master aggregator also reported a massive gain on its investments of over $39 million. This is primarily due to unrealized gains on affiliated secondary investments. This huge gain led to a net increase in net assets of nearly $40 million. This schedule shows the master aggregator's investments in detail. A huge chunk is in affiliated secondary investments, around $444 million. These include investments in Warburg Pincus Global Growth 14 Partners LP and Warburg Pincus Global Growth Partners LP. They also have direct investments totaling over $44 million. Their cash equivalents are close to $62.5 million, mostly in money market funds like BlackRock and JP Morgan. This section explains how they value their investments. Most investments are valued based on their net asset value, or NAV. For direct investments, they use a mix of valuation techniques, including comparable public company multiples and discounted cash flow analysis. Now let's look at the management's own discussion of the fund's performance. They launched the fund on the 2nd of February 2026 as a way for individual investors to access Warburg Pincus's private equity platform. They highlight that since operations began, all unit classes have performed positively with inception to date total returns, ranging from about 2.4% for Class B units to over 8.4% for Class E units. It is important to remember these are early returns and not annualized. The fund's overall objective is to provide attractive risk-adjusted returns with lower volatility compared to public markets. They are achieving this by investing in private equity. They mention they will be subject to market risks like interest rate changes, but since most of their investments are in private companies without readily available market prices, they value them at fair value. This means a lot of judgment is involved in determining their exact worth, which could lead to differences when they eventually sell these investments. This part is about their internal controls. They state that their disclosure controls and procedures are effective, ensuring that all required information is properly handled and reported to management. They point readers to their annual report for detailed risk factors. This is pretty standard, but it means there are many potential risks associated with investing in this fund. Overall, so my take on this filing is that it is a snapshot of a fund in its absolute infancy. The initial performance looks positive, not surprising given the early stage, and the fact that they are likely investing in very liquid assets to start. It's a bit too early to tell much about the long-term strategy or its success. The big numbers we see are mostly from initial capital contributions and the valuation of investments within the master aggregator. What I'll be watching for in future filings is how their direct investments perform and if they can maintain positive returns and manage their high expenses as the fund grows. Is this fund going to be a breakthrough for individual investors into private equity or just another vehicle for the managers to collect fees? It is way too early to tell. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Check the description for more deep dives and our Discord community. Fundy overall.